Hi, Phil. How are you doing today?
Very good. Ni hao.
Yeah,
The
how,
things are it's getting colder here in Calgary, which is a good thing for our business. So I'm quite happy these days.
for sure. Good for your gas usage, for sure. So maybe you can give us a bit of an overview about your company, Pine Cliff Energy.
Yeah, we've been in operations now for 12 years. I was employee number one back in January of 2012, and so it's been quite the journey. We started with just myself and 100 barrels a day of production, and today we're over 20,000 barrels a day of production. We just announced an acquisition, which we'll talk about, which will take us to over 25,000 barrels a day of production. So it's been it's been quite an adventure. We've seen some really great days, and we've seen some difficult days over those 12 years. But I'm very optimistic about where we're going into the future here.
Great to hear. So let's talk about more details about the recent acquisition of Certus. So maybe you can walk with us about the rationale behind it and what you want to achieve as a performer.
Yeah, I mean, at Pine Cliff, our goal has always been to do accretive acquisitions that are going to make our shares more valuable. I know that that's a very kind of a standard response for public companies, but we walk the walk and have for 12 years. You can look at all of our acquisitions, and they've all been very, very strong. That's how we've grown. We're one of the fastest growing per share companies, and that's a key phrase there, is that we really focus on a per share basis. I'm a very significant shareholder in Pine Cliff, as is the rest of our management, and we're very focused on making sure that each acquisition really does make the shares more valuable. This acquisition that we just announced is tied for the second biggest acquisition we've ever made. It's a $100 million acquisition. We are quite proud of the fact that we had a very strong balance sheet in place that allowed us to do it without issuing any equity. So the accretion per share on a production basis, on a cash flow basis, on a very important is on free cash flow. That's really what we focus on in our business, because the free cash flow drives our dividend. And we started a dividend back in 2022. We've raised it twice. We are paying about a 9% dividend yield right now, which is one of the highest dividend yields in the Canadian public markets. And we're doing that on a base of assets that have a very low decline. And that's really what sets Pine Cliff apart, is that we have the lowest production decline of any company in the public markets. And so because it's single digit decline when the rest of our, the average in our industry is closer to 30%, that really sets us apart and allows us to be able to generate free cash flow that we can give back to shareholders. This particular transaction, we think, really makes our dividend even more sustainable going into 2024. And that's really important, because we had $50 million of cash. We had no debt. We were sitting on a lot of cash going into this acquisition. And so we didn't want to give up that cash position unless it was an asset that really fit what we've been looking for. And we haven't done a deal in the last couple of years. So we've looked at a lot of transactions. This one really fit the bill. This is something that we're quite excited about, because it not only increased our production by 25%, it also gives us drilling inventory that allows us to make the model even more sustainable for years to come.
And exciting news indeed. So let's touch upon more on the macro side. Pine Cliff is one of the, I would say, pure play in the natural gas space. So maybe we can talk about more on the natural gas, because I believe it is such a seasonal thing, right? In terms of supply and demand. We even talk about how it works, and in terms of timing for investors, when should they be looking at, or how do they figure out, when's a good time to FS entry point, or how it goes during the year.
It's an excellent point. I mean, we are a gas weighted company. So prior to this acquisition, we are about 87% gas weighted, our production. After this transaction, which closes in the second week of December, is when it's scheduled to close, we'll be about 78% natural gas weighted. So still very natural gas weighted. You're right that natural gas typically has been a seasonal investment. And so quite often people would wait and try to predict what the winter was going to be like, because that's when the biggest use of natural gas would happen. A couple of things have changed over the years, though, for some of your investors that maybe haven't been watching the natural gas as closely. Natural gas is now the single biggest source of energy source in the United States. And it passed coal in 2016. A big reason for that is it's used a lot more in the summertime, not just the wintertime. So with air conditioning, when we have hot summers like we did this last summer, we use a lot more natural gas. This winter, who knows what weather's going to be? I get all kinds of different forecasts sent to me as to whether or not it's going to be a cold winter or a warm winter. And it will be relevant to the short-term gas prices. But for us, it's really about where do we see gas prices going over the next 5 years? We're not building it for this quarter or next quarter, and that's where it gets pretty exciting. Is because I think when you look forward into 2024, 2025. You're seeing a lot of incremental demand coming onto the market. And it's that, I think, is what's going to drive up gas prices further than what they are today. Gas prices, this is going to be a good year. It's not as good as last year, because last year we had really high commodity prices. We did $163 million of cash flow last year. We went from $50 million of debt to $50 million of cash in the bank account. 2023 would be more of an okay year, I would say. 2024, you're right. It's going to be. I'm not sure what weather's going to what impact weather. If it's a cold winter, we could see gas prices get a lot tighter. The market get a lot tighter, and gas prices move up. The nice thing I like about Pine Cliff is that you don't have to try to guess the weather. You're getting paid a very good dividend to wait if you believe in the longer term outlook on natural gas, which I think we'll get into, especially when people will be hearing a lot more about LNG in the future.
Yeah, you just mentioned about the LNG. I'd like to talk about this because I saw that news going on. LNG Canada project is sort of near that sort of critical point of needed completion. So it's scheduled to be online in sometime in 2025. So it's not too far away from now. So what is this going to happen to your business? Any positive impact on your business side?
Yeah, it really is quite impressive of the work that the LNG Canada group has done. The Coastal Gateway pipeline is now 100% complete. That is a brand new pipeline that was built to take gas from the Montney Formation down to Kitimat, BC, which is where the LNG Canada is located. LNG Canada is just to give people a context. LNG Canada is about 2 BCF a day of exports that is expected to come on in 2025, although there is some speculation that now that the pipeline's done, will they be able to accelerate the project into 2024? We'll see. But that 2 BCF a day is a big number. I mean, we only produce, in all of Canada, we produce 18 BCF a day of gas. So that bringing on LNG Canada is going to be over 10% of our production now will be exportable to the off the west coast of British Columbia. Why that's significant is it really puts Canada for the very first time as an exporter and a major player in the world LNG dynamics. North America is already a very large LNG exporter, but it's all out of the Gulf of Mexico. The U.S. is about 14.5 BCF a day exports out of the Gulf of Mexico. But when they have to ship to the Asian markets, that's 24 days shipping time. Off the west coast of British Columbia, it's 10 days shipping time. So the economics are much more favorable for the west coast shipments. And why that's critical is because the Asian markets are the biggest importers of LNG in the world. The 4 biggest importers of LNG in the world are China, Japan, Korea, and Taiwan. And so it's critical that that Canada is finally going to be playing a role in supplying gas to those markets. The LNG Canada phase 1 is 2 BCF a day. The pipeline that was built is built for can be up to 5 BCF a day. So we're all waiting quite anxiously to see if LNG Canada goes to a phase 2, which would take it to 4 BCF a day. And again, keeping in mind that all of Canada only produces 18 BCF a day. So to all of a sudden have export markets available to us to go to the Asian markets is really, really a big transformational event for our industry. To date, we send about half of all that gas that we produce in Canada down to the United States, so it goes south and east. But the fact that we now only have to send it across to the West Coast to access a new market really is changing the environment.
So with all this happening in the background, which is positive for the Western Canadian energy space, especially for the gas part, why should, I want to throw this question to you here at the end, is why should investors consider investing in your company compared to some of your peers?
Well, it's a valid question, and I ask myself each time that I've never sold a share of Pine Cliff, and I just bought more yesterday. So this is why I think it's a good investment. I think we've got a very strong balance sheet. I think we've shown that we're very good capital allocators on where we spend the capital that we do generate. We're paying a 9% dividend yield, which is I think very impressive and something that people can rely on. For us, we want to make sure that dividend is sustainable as possible. Our goal is to continue to increase the dividend. We've only been in place for a year and a half. We've already paid $62 million back to our shareholders in dividends, and we've raised it twice, and I hope to be able to raise it going forward again. So I think if you're looking for gas exposure on a model that is very safe from an investment standpoint, because we just don't drill a lot. Last year we drilled 3 wells, so there is not a lot of activity that requires a lot of capital expenditures to be spent every year. Instead, what we want to do is give it back to shareholders. So as we continue to add assets to the portfolio, we're now a $600 million company from an enterprise value, so it's a good size company. There's some safety in that, but I think more importantly, it's the exposure to the commodity price and how quickly we can move that money back to the shareholders. I think the return of capital model that we employ is quite unique. The low decline, we have the lowest decline rate of any company in Canada, and that really sets us apart in our oil and gas industry.
So thank you for your time here with us, Phil, today. It's always a pleasure to hear your insights about the energy market.
谢谢，再见，再见。
谢谢。